Hello, everybody. My name is Nicole and I'm a technical analyst and private investor. And I thought we'd look at currencies today because it's sort of been all quiet on the Western Front, hasn't it? Despite presidential elections, despite Brexit, despite pandemic, the currency market has been not bad, actually. Quiet. Good, nice, that's what people like. So I brought you three charts today, and I'm going to kick off with the first one. It's a chart of the value of dollar yen. How many yen do you need to buy a dollar? And it's a daily chart with an Ichimoku cloud on it and its associated moving averages. And as you can see, in times of fear and crisis, the yen still is a risk-off investment. And it closed clearly below the 105 yen level, the bottom of a right-angled triangle. And then, would you believe it, by Monday, when suddenly, miraculously, Pfizer announced this fantastic vaccine that they've just found. Interesting that the timing of the announcement, wasn't it? Anyway, so it's all changed, and suddenly it's risk on rather than risk off trade. But it's not exactly, it's not. The danger is very much, well, the danger, the reality, the risk is that the yen will strengthen, which is quite frankly probably the last thing Mr. Suga wants, his new prime minister. They've been battling to stop the yen strengthening, him and half a dozen of his predecessors, as far as I can remember. We're still well below all the Ichimoku cloud system signals. We're below the descending trend line. We're above the bottom, the horizontal bottom of the triangle, but we're not much above it, and we're very much into the point of the triangle. So I think things are going to get a lot messier from here. It's not neat charting that you can expect. Expect hard work. So if the yen is hard work, let's try and find something a bit easier to deal with. And here I have chosen the New Zealand dollar. And as you can see, it has strengthened quite significantly over the last, this year, really, since March. Not only have we broken above the top of this long-term trend channel, we've broken above the top of the clouds, the lagging line has been supported, and this week we've had a little burst above Fibonacci 38% retracement resistance level, which is from a long-term high, long time ago. This was helped along by the Reserve Bank of New Zealand, which decided to leave interest rates unchanged at a record low of 0.25%. I think this is looking quite nice, actually, i.e. nice for New Zealand. It's not massively, it's not out of control, it's not anything. We're sort of back to levels that we've seen late in 2018, so 2 years ago. So, you know, it's not parabolic, it's not ballistic, it's not anything. I think this one has legs, so I'd continue with it. And my third and final chart is, I thought, well, I have to do this, haven't I? I've just got to do the pound against the dollar. Cable, as it's called, because it was the first currency to be transacted by transatlantic cable between London and New York. This is a weekly chart again, and you can see there are many similarities with the New Zealand dollar, i.e. that crash in value in March, and then a recovery, an attempted break above a descending trend line. And now we've done it again this week. Despite Boris, despite Brexit, despite all of this stuff that we're constantly having to deal with, I think you've got a chance here, just a slight chance that we will go up to that 38% Fibonacci retracement level. That's taken from the high in 2014. So, you know, I am talking about long-term charts, long-term moves, what you can expect. It's still cheap. It's still cheap. The pound is still cheap. I think it's worth a bash. I'll see you next week. Good luck, everybody.